All right, folks. So it's Thursday after the close. This is gonna be an S&P 500 earnings season update. We've got about 86% of the index reported for earnings season Q3 2024 so far. So we are in the tail end. So let's just jump right into it. And by the way, if you don't know what earnings.cc is, go check it out. It updates every few minutes with real-time feeds straight from the SEC. And you can see who's been reporting. So you can be up to the date in near real time. And we've got these handy little links to the reports. So be sure to check out earnings.cc. Make sure to subscribe and like too. Anyways, what do we have here? Here we have our EPS trailing 12 months in these high bars and just the current quarter in these low bars. So we are still seeing period over period growth. Estimate over real over estimate growth. So that's positive. A couple of weeks ago, the the estimates were coming in below the actuals, and so this was problematic, as it indicated that EPSs were not coming in healthy. And did I say 86%? I meant 85%. So let's see what else we've got coming up here. The line. Okay, line charts. What do we have here? Let's just zoom in really quick. There we go. So again, we've got the finalized estimates, and again, we're 85% reported, so we're not going to see any major surprises to the index. We might still see some surprises to individual stocks, of course. That can always happen, but it's at 85% reported. It's unlikely that the SP 500 index is going to see any major surprises for the rest of this earnings season. And like I said, as you can see, the operating and EPS and reported EPSs are both still above your previous actuals, right? So that's good. It's a good portent. Again, these are so this last one was the trailing 12-month values, EPS values, and these are the quarterlies. So again, you can see that the estimate at 85% reported is still coming in above the last reported quarter. So that's positive. So let's keep going and see what else we've got. SP500. Sorry, folks, I'm running my script here. I've got like a script for each one of these things that we're looking at. I've got a script. Okay, not down. Plot schedule. Visuals. There we go. Okay, so this let's not look at this just yet. Python SP500. Just look at the sales info. Yeah, that's gonna be more interesting. Then we'll look at the forward schedule. All right, so I've got some bar charts here by sector, by industry sector. So you can see the sectors here. Now these are the sales, so like the revenue. You can see that, for example, energy, it's been in decline. Now the 2024 bars, they're still missing Q4, okay? So just be advised, they're still missing the value for Q4. But you can see who's been struggling. Energy, materials, they both saw year-over-year declines in revenue. Utilities, real estate, a little bit stagnant. Communications has not recovered from their mid-teen years sales highs. S&P 500 in general, though, appears to be doing strong, thanks large in part to IT, financials, healthcare, consumer staples, consumer discretionary, industrials. Let's see, what do we have here? So here we've got the quarterly breakdown. So again, we can see a 2-year trend here, kind of like either flattening or decreasing. Energy, materials, industrials. So those are all very physical world, kind of like big time businesses, mines, integrated oils, factories, metallurgy, chemical plants, um, consumer discretionary is flattening off a bit since 2023. So that might coincide with like the interest rate fluctuations that occurred once inflation started heating up. So that might be why we don't see so many sales. Although I don't know, sometimes when inflation heats up, you get a higher sales number, even though less real goods exchanged. But whatever. Consumer staples seems to be in a steady uptrend. Same with healthcare, financials. Again, you can see that big decline in 2018 for communication services. I'm gonna really have to look up what happened there, because it's not coming to me off the top of my head. If anybody has some comments around that, I'd be really interested to hear what you guys have to say. If anybody knows what this decline's all about in 2018 for the communication services sector. Utilities, steady as she goes. Again, here you can see this flattening off, in real estate. Okay, so let's see what's next. Okay, so here we have them all lined up on top of each other, so we can kind of see who plays what role in the S&P 500. We've got our healthcare. These are some pretty big players. They account for maybe half of the sales of the S&P, right? Oh man, what did I just do there? Yeah, like look, 250, 500, they account for half of the sales of the S&P 500. Who's next? Purple, orange, blue, green, green. Let's see. Purple, orange, blue, green, green. Yeah, so that's your blue's your healthcare, your purple's your energy, your healthcare here. Your green is your IT, your other green's your industrials, and your red's your materials. Let's see where financials fit. Oh, financials very close with materials. Alright, let's see what's next, folks. Okay, we already saw that one. Okay, so let's get into these guys. Okay, so we've got that. We've got this. We've got this. Okay, so this is... which week was this? The week... Okay, so this is the current week, folks. This is the week of November 11th to the 15th. So we had a lot of reporting in IT and comm services. Well, not a lot, but I mean relative to the others. Busy every day. Today after the close, we've got some IT going on. Again, this the waiting for reporting for this week. These are some of the names: Tyson Chicken, Home Depot, Cisco Systems, Walt Disney. Alright, so this is going to be next week, folks, the week of November 17th to the 22nd. This is going to represent 9% of market value. And we've got IT, consumer discretionary, consumer staples as your top 3 categories. We've got reporting basically from Tuesday to Thursday. Both sessions in all 3 days except for Thursday daytime. Again, IT, consumer discretionary heavy for next week. Lowe's, Palo Alto, Walmart, Target, Jacobs. Oh, okay, so there you go. There's your consumer discretionary stuff right there. IT, Nvidia, something technologies, Intuit, blah, blah, blah. There you go, folks. Okay, week 3. Oh, come on. There you go. This is going to be the final week in November. November 25th to 29th, we're going to have reporting in IT and a few others. Who do we got? We got early week reporting, folks. Monday after the close, Tuesday during the day, Tuesday after the close, IT. There you go, folks. CrowdStrike. Ooh, that'll be interesting. Let's just take a look at CrowdStrike real quick. For those of you that don't remember, CrowdStrike was involved in a big scandal, I guess during the summertime. Scandal. How a software caused one of the world's biggest heights, so July 19th. You guys can look at this stuff on your own if you're interested. You know, it was kind of a big deal for it impacted a lot of groups, a lot of companies, a lot of governments. You know what I mean? See right here, this would have been the crash right here, I guess. And then, you know, they've largely recuperated, so it'll be interesting to see how they report on their revenue for Q3, because July would be the first month of Q3, so they would have had all of July, August, and September that would have been impacted by the CrowdStrike debacle. Okay, so what else do we have? Okay, first week of December, we've got some consumer staples reporting. Let's see what we got. It's going to be like 2%, less than 1%, folks. It's going to be less than 1% of the market cap of the S&P. Wednesday, Thursday, consumer staples. I don't know who. Hormel Foods, Brown Foreman, I don't know. Dollar General. There you go, folks. There's your S&P summary for Q3 2024 on November 14th, Thursday after the close.